Hey guys, so we're going to be going over when you should do growth or when you should do dividend investing. So there's a bunch of different scenarios where you would want to choose one or the other. So a great, most popular growth fund would actually be the Charles Schwab US Large Cap Growth ETF, ticker symbol SCHG. And this is a pretty great one. As we can see, it is up 811% since 2010. So huge gains, and it's very popular for good reason. But we have to keep in mind that with growth like this, it's going to be volatile. So that's why a lot of people like to stay away from it. So for dividend investing, a lot of people like to choose SCHD, which is the Charles Schwab US Dividend Equity ETF. And as we can see in the chart, it's only up 38% since 2011. So that's a significant difference in gains, but we have to keep in mind that this doesn't also tell the full story because this ETF right here pays a dividend and we have to take that into account. So to take into the total real returns, we can use a total real returns calculator. And as we can see, we have both of these ETFs plugged in. And as we can see on the chart here, this red line is SCHG, and it is doing much better than SCHD over the long run. So it is a little bit more volatile. As we can see, it does jump up and down much more than SCHD. And so it's going to be a different strategy than holding SCHD. If we take a look at the total returns, it is about a great difference, almost double the amount of returns with the growth ETF than the dividend ETF. So we do want to take into account. So when would you want to use SCHG? So people who are looking to grow their portfolio very aggressively would want to buy this. People who are young, people who are starting out with a low amount of capital are going to want to buy growth ETFs. They have a lot of time on their hands. They can take the risk, and overall, they can manage the swings of the market much more better because they don't need this money in the short term. Now, on the other hand, if someone is closer to retirement, if someone's looking to preserve capital more, this is a great choice. This is great for people who are looking to build income. It does pay out dividends every quarter, so people do end up living off of SCHD during retirement. But keep in mind, you're going to need a lot of capital in order to get that nice dividend to supplement your income. So for people who don't have that large amount of capital, people are going to buy growth in order to get to that point where they can then convert it to a dividend paying ETF such as SCHD in order to supplement their income and eventually live off of dividends, which is the main goal.